So good afternoon, everyone, and welcome to our webinar. My name is Achim Arnold, and I'm account executive at Oper, and I will be your host today. So it's a great pleasure to have you all with us as we explore how technology is reshaping the role of mortgage advisors in today's ever-changing market. And this discussion, I think, couldn't come at a better time. So with increasing complexities in mortgage market and tightening regulations, advisors have never been more essential as today. So however, finding and retaining qualified advisors is becoming more and more difficult, pushing the industry to innovate. And today we'll discuss how technology can help address these challenges while driving efficiency and improving outcomes for banks and their customers. So let me start by introducing our great lineup of speakers. So we start with Geert van Kerckhoven is our co-founder and CEO at Oper Credits. Geert leads Oper Credits team of 60 plus professionals optimizing mortgage processes for 16 banks across whole Europe. And he brings extensive expertise in mortgages, innovation, and leadership. Wouter Lachat is also co-founder and head of customer success at Oper Credits. And with extensive experience in mortgages and banking technology, Wouter helps transform borrower experience and achieve clients' mortgage objectives. And last but not least, our special guest, Véronique Jacobs, product manager at Triodos Bank. Véronique brings many years of experience in financial service and specializes in mortgage loan management and product innovation. And together, our speakers will share their perspectives on how banks can empower mortgage advisors, save costs, and also reduce errors through technology. Let's have a quick look to today's agenda. Geert van Kerckhoven will kick off with insights on the evolving role of mortgage advisors and how technology is helping to address their challenges. Afterwards, Wouter and Véronique will present lessons learned from Triodos Bank on leveraging technology to support advisors, reduce costs, and automate processes. And then we'll conclude with a live Q&A session where you can ask questions directly to our speakers in the Teams chat. Maybe a quick housekeeping note. Please submit your questions using the chat in Teams, like mentioned, and we will answer as many as possible at the end of the webinar. And if we don't get to your questions, we'll follow up with you afterwards. And the webinar will be recorded today. So I would say, Geert, now let's get started. Over to you.
Welcome to our webinar. It's very nice to see that 2 weeks before the Christmas period, you want to spend a little bit of your lunchtime with us to talk about mortgages. That shows how committed and passionate you are about a subject such as we are. Let me quickly kick off with the first topic on which I would love to spend 15 minutes with you on the advisory side. And I think it's also something that we will spend quite some time on our trends report for 2025. I mean, if you look, and a lot of you are in the industry, but what we have noticed in the last 6 months is that there is again, and this is of course very good, there is again some optimism back into the market. So we've seen volumes radically drop in 2022, 2023. And now, bit by bit, we see that markets are recovering. Some markets are, especially in the Central Eastern European market, are really drastically recovering year on year. But like overall, we see quite some optimism. I think Germany, of course, one of the larger markets in the EU, now for Q3 reported again a 50 billion quarterly volume, which basically brings it back to the 200 billion. And, you know, these are back to the volumes that we saw coming in 5-6 years ago. So overall, there is quite some optimism, which is good. And of course, you know, on the other side, that also means that, you know, your loan advisors today, the people who are actually doing the sales, they also see quite some new volume coming in to the market. So as we see signs of recovery. inflation largely under control, volumes coming back. But if you look at the market today, there are still two perpendicular trends that we see happening for borrowers, which have an impact on your loan advisors. Next slide, please, Achim. So if you look at the market today, there's like this dichotomy in a sense between the affordability for borrowers, which becomes an issue, and at the same time a strong push, more of a regulatory push to renovation, a complex landscape of subsidies, and basically a push to put in a lot of measures for people to acquire a property. Let me first go on the reduced affordability. So interest rates have dropped a little bit, but of course the interest rates are not back to when we had negative interest rates. So people today are still borrowing at a 1-2% premium as they were 3 to 4 years ago. And house prices across Europe haven't really settled down that much. So it actually means that today a 80% LTV is still very challenging for borrowers. Hence, the importance for your advisors increases because they'll need to find more solutions than that they can just do standard mortgages. So this affordability has been an issue, remains an issue today. We think it will still be an issue going forward. And we'll probably see that, and that's already also happening, into more complex mortgage products. For example, in Belgium, we now have 40-year mortgages. We see similar trends happening in the Netherlands. Also in France, we got the 27-year mortgage. So we see longer durations, sometimes working with multiple lines, maybe also in other markets than where it's common, like Switzerland, more balloon credits. So really trying to enable home ownership, combined, of course, with also some government programs. But the thing is, of course, at the same time, and that's where I say it's a bit of a dichotomy. At the same time, we've also, because of the Green Deal, have pushed a lot of measures. Like, for example, when people come with an energy inefficient house, there are certain measures that should be taken place to renovate it. So it also increases the cost that you need in order to acquire the property. So although this is, let's say, this modernization wave is a wave we need to go through, and I'll touch upon it a bit more later, it again also complexifies the whole project. And especially then if you today have certain countries where you have a first-time homebuyer subsidy scheme, and then you still have subsidy schemes, which are often regional, like, for example, in Austria, this whole advisory process becomes very tough because your advisors need to navigate different documents, different processes in order to make sure that that borrower gets to the right product. Next slide, please. And this is, just a few examples. If you just think, this is now an example from the UK market. But if you look at the average monthly mortgage payment in the UK, it almost increased by 40% in like a very, very limited amount of time. So we see that the inflation adjustment hasn't fully gone through, and especially in countries like UK where you have shorter mortgage periods, this can really put a stretch on the system. So DTI, LTV will become more and more of a stretch and will need to be more navigated going forward. And also, if you then think about, how are we going to make that possible? We do have the whole green financing. Next slide, please. The green financing, the Green Deal, which puts a stress on the system. Just to give you again, this is directly from the EU Green Deal. If we want to hit that ambitious 2030 target, 500,000 homes will need to be upgraded on a weekly basis. A second problem because of that is that, of course, what governments are doing today is trying to make sure that when I now buy a new property, is trying to basically put renovation targets on, let's say, the newly acquired properties. But that again puts a huge stress on the affordability. But so that's, I think, the landscape which we're navigating today. Next slide, please. So how does that impact the overall mortgage journey? And you can click a bit further, Achim, so then I immediately have all the blocks. Yeah. So, oh, yep. So it basically means we see innovations or change happening on multiple fronts, especially again having very, very thick impact or a very strong impact on the advisory journey. Because I mean, as soon as a client starts thinking about, or a borrower starts thinking about acquiring a property, you need to do renovation calculations. When you want to get into renovation, you should think, what's the energy performance? Should I still top up for solar panels? If yes, what's the impact? Which subsidies will I get, etc. So you get into a whole set of calculations that you need to think about. If you want to extend it, there's also this house lifetime planning. You know, if you cannot do all the renovations in your first year of acquisition because affordability is to be stressed, you can also think about how do you do renovations over time and what's again the impact on the energy efficiency. So there's like a lot of calculations that get added to the process. And then also what we see is at the same time is that you get more mortgage products. On the existing property side, you can think about the top-ups or the re-uptakes. You can think about special renovation loans, where you have more of ROI calculations on, if I invest this, how will I make it back from my energy expenses? You'll probably also, as I already mentioned, have more complex product structures to really cater for that whole affordability. And especially on the green financing part, we will probably in the aftermath of the process have much more checks we need to do to also make sure that what clients promised they would do actually do, because it could be contingent to the subsidy, also to the subsidy requests, or also to your overall reporting to the regulator. Next slide. So, as I said, two dichotomies we see in the market: reduced affordability on one hand, so we'll probably have more complex products, more the need for advice, so more putting your advisor into the central role. And at the same time, this complexity will only be enhanced because of extra requirements that we today have for the regulator, and also to make sure that we can help as a private sector into that energy transition. Can you click, please? So, as said, the most suitable product and the most suitable financial plan, we feel, will only take more time and more expertise to get there. Click, please. So, in a sense, it will make advice and hence advisors crucial to be experts, crucial to be involved into the journey to help you get those borrowers, let's say, reduce their anxiety and get them across ultimately the line to realize their projects. Next slide, please. But the problem is also, and that's something we have a data point from the UK that the average age of a loan advisor today is 56. But can you click, please? But what we at the same time seen is that, this expert mortgage advisor becomes a really scarce resource. Especially now that volumes are increasing, we really see a lot of our clients and a lot of our prospects struggling to be in time to advise a client. We have a lot of, let's say, older advisors that are going to retire or have retired. It is not really a junior, it's not really like a sexy job for juniors to enter. So finding the right talent that still wants to do this is hard. And completely replacing it with a digital flow is hard, because exactly what I've said earlier, the product complexity, the market dynamics, just make sure that I just enforce that borrowers still want to talk to somebody in the process to navigate. So you'll more have to think about how do you support existing advisors? How do we support scarce junior advisors in making sure you can navigate them throughout this journey? Next slide. And of course, as I already mentioned, when you then find, let's say, more younger, let's say, hungry advisors, you need to provide a lot of training. It's not only about making sure they understand what are the possibilities at the bank, what are the different products you have on offer, but also, and you can click at him, but also making sure that they can navigate the whole landscape of subsidies, possibilities, applications. I mean, they become more of strategic consultants, but at the same time, and this is a quote of one of our clients, especially when it comes to green financing, loan advisors also know architects. So they also take on a huge liability. It's like, a general practitioner also is not a surgeon. So it will really be about how do you train them to do the basics extremely good, but at the same time also make it very aware that they know what they don't know. So you can basically, again, connect them to specialists. Next slide. So when we started thinking about this, at an Oper side, I think the first assumption, just looking at the market data and just having many interactions with people like yourselves, we kind of acknowledge, look, the advisor is here to stay. And in the current climate with recovering markets, it will be really crucial for them to stay in the journey and navigate those borrowers, first time, second time, buy to let, what have you, into really making sure you can convert them to become clients of the bank or to help them remain clients of the client. And if you then look at today, what are advisors spending a lot of time on? There are two things. First is efficiency. Today, we do not only see an advisor as the strategic consultant, but most of the time, an advisor is also a letterbox, because they receive documents, they process it from A to B, they try to do a high-level risk assessment, they're sending emails back and forth, they're communicating with the client. So there is a lot of efficiency gains that can be made into processing the loan application, processing the data, and make sure that they can really focus on when the client comes into a virtual conversation or when the client comes into the branch, that they have a qualitative conversation, that everything around it is as automated as possible. And then it comes with the second part. I mean, we had a prospect back in the days that said that for a certain region, they saw mortgages drop significantly because the junior advisors didn't feel comfortable with the new products. And so the only way they could fight it was to bring them to head office and to train them for weeks. But the problem is you need to do that again when something would change in your products and your marketing approach. So how do you make sure that you can guide more junior advisors, more or less mortgage expertise advisors into finding the right products and providing more qualitative advice? And I think with our technology, we're working on various solutions. Next slide. You can just click, yeah. So first and for all, of course, what you can do online is better lead qualification. So today, the majority of leads, they funnel in through your website. Is already to give them a bit more of an extended affordability assessment, and to make sure that you get conversations with clients that really matter. You can also do qualification, by the way, on your existing client portfolio. Automate workflows as much as possible, especially around data and documents. I'll get to that in a second. And then also help loan advisors in, when a client said, look, I really like this product, how do you make sure that, let's say, the loan application completion is as automated as possible, leveraging the documentation that they have at hand? Now, what does that look like? This efficiency and this guidance. Next slide. So a first thing we are actively pursuing at Oper today is basically to not only provide a really comprehensive suite for loan advisors to advise the right possible product, but also to work with what we call assisted suitability recommendations. So basically, within the customer conversation, when a borrower has said, look, this is my repayment capacity, this is what I make, this is the property I'm thinking about, is also that based on your guidelines and historical data, is just say, look, we think a combination of a green mortgage on 20 years combined with a balloon on 5 is the ideal composition, and that we do based on these and these and these data points. So you don't take the advisor out of the loop, but you guide them based on the regulations. So today we do this mainly on the existing prospectus guidelines you have running internally. But we, in the next iteration, also want to expand this with subsidy data, government scheme data. So basically, it is the co-pilot that helps an advisor, especially a junior advisor, to navigate through the risk policy. We probably know that the 56-year-old loan advisor that has done 30 years of mortgages and hits their bonus every year by a 20% premium might not be in the market for this solution. But let's say with the 30, 25-year-old, 38, 31-year-olds advisors, this can really help them to feel confidence in advising the right product. But this is on the, let's say, assisted journeys. If you go to the next slide, I mean, what we also really think that advisors can gain loads of time is with collecting the documents more automatically. So today, we already have the possibility that a borrower can upload documents themselves, even prior to the advisory conversation. And today, what we do is we already process all the documents, we classify them, and we basically make sure that they are fully cleaned up. So nobody needs to run to a scanner, or nobody needs to run open mailboxes, but all the documents get, let's say, cleaned up, classified, and then in our next step, we basically start extracting the necessary data out of it. So that's the next slide. Is that then today we also work with a quick application. So basically, we allow the advisor to use that data, which is verified data, to populate the loan application. And in parallel to that, we do a consistency check. So obviously, a client might upload, or a borrower might upload 3 salary slips, a tax statement, etc. We do cross-verification on all those documents to make sure there is consistency. This has 2 advantages. A, we reduce 4 to 8 hours in completing the loan application, which I think is a huge benefit on the business process. But also earlier in the process, if you have a client that already provided you with 2 or 3 documents prior to the advisory conversation, you can already do some lead vetting. So you kind of know, okay, this is, you can already reduce time on preparing the conversation. You can already know, okay, this is what I can offer to my client, or, from an affordability point of view, this will never work. Today, we see many banks to ask for the documents before the conversation happens. This way, we kind of automate that lead generation before getting really into the conversation. And again, let's say, just treating the documents in an automation flow, again, can reduce the journey by 4 to 6 hours on your advisory. And so hence you free up your advisors to do more advisory work. Next slide. So just to wrap up on this, I think in 2025, the advisor will be more important than ever. Does that mean digital mortgages are dead? No. On the contrary, our belief is that as labor becomes an incredibly scarce resource, and an advisor is the person that you should basically give a coffee every day, give cakes every day, and should treat really well. You should also treat them well with the right technology, so they don't have to do redundant work, and they can really focus on providing advice. And in order to make the job easily for people that do less mortgage expertise or haven't done this for 15 to 10 years, really provide them with the tools to navigate your policies, to navigate the product complexities you have so they can provide a better experience to your borrowers, and you can basically benefit from this uptake in the market. I think that's high level how we see the role of the advisor, how we feel the advisor of the future should look like, the bionic advisor as you wish. And I think we're very excited what we see with our clients on how we can power them with our technology. But it's always better to talk, of course, to let the clients speak for themselves. And with that, I would love to pass the baton to Véronique from Triodos Bank and Wouter, who will be leading this fireside chat.
Before we start off, perhaps, Véronique, do you quickly want to introduce a bit Triodos Bank for the people in the call that don't know Triodos Bank, perhaps? Perhaps you can get started there.
Thank you. So basically, we are a bank for who the sustainability and social inclusion is key. It's very important for us. It's part of all the products we offer, and especially on the sustainable, so mortgage loans. So we incorporate sustainable and social inclusion criteria.
Right. Thank you very much, Véronique, for that introduction. So I think during this session, we briefly want to touch upon some of the challenges that Triodos had, but also see a bit what we have been doing together in the last few years and months, some of the impact that we create together. So that's a bit the topic for today. So to get started, Véronique, can you briefly introduce us a bit on the challenges that you were facing a few years ago before we started working together, but also some of the objectives that you had in mind with our collaboration?
Okay, so as I mentioned, we incorporate all sustainability criteria. So basically, we set up interest rate, and then we apply reduction. So the more sustainable is your dwelling, the more reduction you will get on your interest rate. And then regarding co-housing, we also have some specificities. So the challenge was really to find a calculator that allow to capture all those specificities. And also with what we had at that time, so we developed a simulator also internally, we couldn't capture the leads. So that was a bit annoying because in fact it was all mortgage loan potential that we missed. And we also had an issue that the pricing, the tool that we had in the simulator was not allowing flexible pricing. So that was also an issue because, as you know, interest rate plays a role in the margin that you can make. So when we start with Oper, so we had those objectives, but also to reduce the customer acquisition cost because in fact, we don't have lots of marketing budget. So we cannot really offer like a national campaign for mortgage loan. And on top legislation in Belgium say that you cannot encourage people to borrow money. We also need a digital tool to distribute our mortgage, and then something very easy to use for our account manager because we have a small team of account manager, so they need to work very efficiently. And at that time before Oper, we were working with Excel files, so I had lots of technical activities to perform every time we were changing pricing. And of course, it can lead to manual error because I cannot protect all formula, all cells. So that was, we really need a tool that worked correctly.
All right.
So that was the challenge.
Great. So to quickly recap a few of the challenges that you listed, was one, make the life of the advisors or the account managers more efficient by providing them with tooling, supporting Triodos also in reducing the customer acquisition costs. And then we also had the entire direct online journey. Those were, I think, the three main challenges. Perhaps also you touched upon briefly in the introduction, also tying back to Geert's explanation about green finance. Triodos is one of the front runners in green finance, I would say. Can you also briefly describe to the audience a bit how you see the impact and what your experience is of this entire green finance topic, which is becoming very hot all across Europe, let's say, what the impact is on the mortgage journey?
Yeah, so we need more and more documents to prove that dwelling is sustainable. We also need valuation of house before renovation and after renovation, so expected valuation. So for us, it's key to have a tool that allow first the specificities on sustainability. So like we are working with specific project in the tool, and basically you have the purchase of existing dwelling with or without renovation, and people need to be so we need the calculator to allow to type and input the EPC value, so energy performance certificate of the dwelling that they plan to build or they plan to renovate. And then in the upload of the document, we need to make sure that people can upload those certificates. So in the range or the list of documents to provide, we put by default that we need those certificates. And then we, as a bank, where those criteria are so important, our advisor provides information on the financial data, but also all the sustainability. So the renovation, how to renovate, because that's also mentioned on the certificate, but to make people, prospect leads, very conscious about those requirements. And that is really our strength, to have a tool that allow the sustainability and the financial information.
Okay, so the advisors at Triodos are a bit like architects.
But are not binded.
Okay.
But for sure, we help the leads with those information.
Of course. All right, clear. Thank you, Véronique. Yeah, perhaps we discussed the challenges a bit before. Perhaps now, what are your experiences and what are basically the benefits? So perhaps first focusing on the customer acquisition cost and the direct distribution. What are a bit your experiences or best practices from the last few years that we've been working together?
Yeah. The huge change that we saw is that before we couldn't capture the leads, as I mentioned. So we really want to improve the KPIs on the direct production, so the production done via our sales force. And thanks to the tool, we could capture them, we could contact them, we had plenty of information in the tool, and that was the highest benefit of the tools, really the capturation of the leads. So,
Okay.
and of course, the flexibility regarding the pricing that we couldn't have before.
Okay, clear. Yeah, perhaps to zoom a bit in on the direct channel itself. Can you describe a bit what your experiences were? We set up this direct channel together, starting from your website, going through the entire process. Can you describe a bit your experiences and best practices in setting up such a process, let's say?
Okay, so the way we were thinking about the tool was to get a calculator that offered two flows. One that allows prospects to calculate how much they can borrow based on their income, their own funding, and then the other one to calculate how much they will reimburse on monthly basis when they have a specific project in mind. So basically the cost of their home, future home. And we also need a tool that provides digital onboarding, but a very secure digital onboarding. So what we have via the tool is that we have a secure account with two-factor authentication. So prospects have also access to their own portal, so they can add additional information to refine the financial assessment and also reduce the data input at our side. Because as you can imagine, with a small team of account manager, we want to reduce also the input. So then one of the benefits also is the automatic loan assessment. So in the Oper platform, so basically we set up pre-approval. So you have negative or positive pre-approval based on some standard acceptance criteria that we set up. And those are quite challenging because we need to set up criteria based on the age of the person when they finish to reimburse the loan, the energy performance criteria, the social inclusion, so the amount on debt to income, all this stuff. So it was really quite a challenge on our side, and also make sure that at the end Oper understood all these criteria, which they did. And the last part is also based on document management and simulation details. So we also need people to upload all the evidence. So what they say is very nice during the interview, the meeting that we have with them, but then we need evidence. So that was key, that the tool accept information. And then we also need in Belgium to have simulation PDF that shows like an optimist and a pessimistic scenario. So as we mostly have variable interest rate, we need to show to customer what happened in the next 5 years, or when the rate is revised, what will be the monthly allowance, monthly reimbursement cost. So that, and regarding document also, we have a loan request form and people can sign it digitally. So it's via Adobe, and that's very helpful.
All right, thank you very much. In explaining the direct channel, I think indeed we together had to figure out a bit the optimal way to set up the pre-approval flows based upon the Triodos criteria. I think we also over time, if I remember correctly, adjusted it based upon the inflow of leads to optimize basically the work of the advisors. I think also the entire topic of today of the webinar is more focused on the advisors. Perhaps you can also, Véronique, briefly explain a bit how the life of the Triodos account managers has changed over time, what a bit also there the best practices are, how they operate. Perhaps you can give us some insights on that front as well.
Yeah. So to be honest, for them, it was not really easy the first months because they had to change from completely a different way of working. So that was a challenge for them. But as soon as they could use the tool the correct way, they have to. So we changed a bit the flows, how to handle all the leads that were coming, because suddenly we had like 80 leads per month, while before we had nothing except phone calls. So it was really different. But what helped a lot is that we could customize a dashboard. So according to our flow, so internal flow for the advisor. So really going from new request, pre-approval, positive, negative, and then until the loan request form is signed. So, and the flexibility at Oper side was good because, you know, for us, it was a new start. So sometimes we change category, we add suppress. So the also the fact that mortgage, our advisor could get notification when customer upload their document, the fact that we had pre-scoring, so people could prioritize, say, okay, we will first contact the positive pre-approval, and then we will focus on the negative approval. So all those information allow us to really have a customized way to handle the simulation. And then via all the information that we could capture, we could assist also better the borrowers in their specific project needs. So that was really. And then just to finalize, so the final decision to accept or refuse the mortgage is really still done at our side, so in our existing system via data transfer that we have to our core banking system. So that's to recap.
All right, thank you very much, Véronique. I see that we are a little bit over time, so perhaps still a few things that we can briefly touch upon. Perhaps two more things that I want to ask from you. First, can you share some results or outcomes that you have seen in the last 2 years that we have been working together around the borrower and the advisor journeys, let's say?
Yeah. So basically, the prospect get a pre-approval directly. So before they were calling us, making a simulation, and then they knew if it was kind of yes or no based on first information. So that was really a huge change. Then, as we are a very small actor in Belgium and only with a small team, so we were behind the other banks as we didn't have a digital tool. So then we could, also say that people can handle the simulation, upload their document, get all the information they need via a digital tool. And then maybe, as I mentioned, we really outpace the result of the simulator. We never expect to get so many leads, to capture so many leads. And thanks to that, we didn't need to plan marketing budget again. So that was, we also had positive feedback from people using the tool, from our account manager. So that was very nice.
Very happy to hear that. One last question before we go to the Q&A. We have now been working together for the last few years. You had some mortgage challenges. Do you have any advice for other people here in the webinar that are facing similar challenges in best practices, etc., that you can share before we wrap up?
So I think the most important whenever we use or choose a supplier, because we, of course, consume many suppliers and many offers, is to make sure that we find a partner that is really flexible. So meaning sometimes you have big companies, but they have a process that is really not flexible. So we change a lot because we're a small bank. So we need a partner that can support us in a quick and fast way, that can find solution whenever what we request is not possible. So that is the biggest advice I can give. The world is changing with the mortgage loan also, all the requirement that regulation request. So it's to make sure that when we select a partner, we take someone that is flexible and that make many evolution of the tool, not only once a year. So that was...
Perfect. Thank you very much, Véronique. I really want to thank you again for joining in. And then I give the floor back to Achim.
Yeah, thank you, Véronique. Thank you, Wouter, for the insightful fireside chat. Now we'll open the floor to your questions, and please continue to submit your questions to the chat if you haven't already. We will answer as many as we can. And I see we have already one question. So Geert, Wouter, who wants to answer the first one? Maybe I have to ask the first one. So in the UK, Oper part, you mentioned that in the phase before credit requests, the customer can upload documents in the system. How do you reach to the client for this? Is it the broker who sends a link requesting the customer to upload already some documents in advance of the appointment? Does it work? Are customers willing to send confidential documents up front?
Yeah, I'll take the question. Maybe Wouter, if you can elaborate. So if you want to add something, please do. So first of all, it's not only I mentioned in the presentation, but it's not purely limited to the UK. Actually, we have different flows where borrowers, upload documents before they actually have an advisory conversation. In the Triodos flow, for example, they also do it directly after pre-approval, if I'm not mistaken. I don't know if that's still the case, but
it's still the case. It was surprising, but it's the case.
Yes, and Véronique, maybe you can answer. Do people upload? So they're coming completely online. They never talk to Triodos. Do they upload documents? Yes, no?
Yeah, it's really strange because we did not expect that. But people, in fact, are uploading their confidential data, so income information and everything. And I think it's via the secure portal that they have. They feel safe to do it, and they know that after the discussion will be fast with the advisor because we have everything in hand.
Exactly. So that's the same pattern that I see across our clients. So of course, Triodos, and that's also, I think, the reason that the direct channel, it always amazed me how strong the brand is. So people that go to the Triodos Bank website are really committed. But I see that also across other clients. Of course, when you are in a broker process, that's also what this question refers to. We also have one client where the bank sends a link to the client that actually came in through a broker. And there we also see that upload ratios are okay. But yeah, the question is, of course, if you work through a broker, who owns the client? Whose responsibility is it to collect all the information? Yeah, that's a different discussion. And there I said we only have one client expertise. But bank going direct before an advisory conversation results are actually pretty good because people want to have indeed a good mortgage conversation and they try to bring something at the table to make sure they are good. That's a bit our expertise.
Thank you, Véronique. Thank you, Geert. Thank you, Wouter. So we have another question. In case of a loan approval, how is KYC and contract signing done? Is it possible to do that remotely? What options are there for advisors and clients?
I can also answer to that if you want.
But sure, thanks, Véronique.
In Belgium, what we did, we integrate ITSME, which is an authenticator, secure, fully used in Belgium, and that allow to upload automatically all the data on the customer. So it's national. So that's the real KYC for us. So it reduces the KYC review. That provide register, social security number, the address, all the data, the ID card number, and that is an added value.
And then perhaps to add to that, Stefan, your question about the signing. So today it's already possible to sign digitally certain documents using Adobe Sign. Currently, we're rolling out DocuSign integration, which really also supports qualified signatures, which are needed to sign the mortgage offer, let's say, and that will be rolled out in Q1. So then you basically can have a perfectly hybrid process where the signing, etc., is done remotely. Yeah.
Thanks, Véronique. Thanks, Wouter. So another question from the audience. Creating an account, isn't it not a barrier for the customer to proceed?
Based upon our experience, it's not really a case. I see, Sven, that you below have written that for broker customers, it might be a bit different. But based upon our experience, if we first show interest rates and indication to the borrower, and we really provide value to the borrower before they need to create an account, then usually they are willing to sign up. And we also additionally see this somewhat as a commitment for the borrower, right? We also don't want everybody to sign up and then your advisors need to contact everybody. So it's a certain balance that we try to put in place where the borrowers basically need to show some level of commitment before we as an advisor want to spend time on that customer, let's say.
Thanks, Wouter. And we have another one from the audience. Is the Oper tool used for the account managers of Triodos only, Véronique? Or is this tool, which includes criteria of Triodos, also used by independent credit brokers too?
So it's used by Triodos. So that means the direct customer that we have.
Thank you.
I don't know if it answers to the question.
Yes, thanks. Are there any more questions from the audience? To Véronique, to Wouter, to Geert? Maybe, Geert, a question to you from my side for the audience. While technology can drive efficiency, how can banks ensure they maintain the personal touch that clients expect from their mortgage advisors?
Yeah, it's a good question. I mean, for me, it is a little bit what I also said in my keynote. I think what we should do is automate as much the transactional work that is there today. I mean, it's also what Véronique mentioned, but I think it is still staggering to see how much Excel sheets are being used at banks to do advice, to calculate stuff. It is still, for me, sometimes crazy to see how much people run to the scanner to scan documents to get it into the core banking. I mean, my own bank, I'm not going to mention which bank I have my mortgage, but my bank advisor back in the days told me that she always had to reserve 4 to 5 hours to do the loan application. So she gave me the simulation document and she called me. This is 18 months ago. She called me and she said, "Are you sure you're going to do the mortgage with us? Because then I need to reserve 4 hours to put it into the system." I said, "For what?" So, yeah, we're not using Oper yet, jokingly. But 4 hours to key, I mean, all the documents, I mean, and I was a bank client. So 30% of my data sat in their CRM system. 40 to 50% was in the documents that I gave. So there's like, for me, like the answer is really, let's look at that. Let's automate that as much as possible. KYC through a platform like It's Me, but through digital identity, signing of documents digitally. So you can really put your advisor into the spotlight of providing what matters, and that is, navigating a commitment for 20 to 25 years.
Thanks, Gerd. We have I think, a last question from the audience regarding the time. So the customer of a credit broker often has complex loan requests, and it's totally different from a customer of Triodos. How can we challenge this? I also want, as soon as possible, documents plus, and I want the documents in PDF and not in JPEG.
Wouter?
Perhaps first the last point. I want to documents in PDF and not in JPEG. I fully agree. At Oper we have two things to cater to that. We basically all JPEGs or all other picture formats are automatically transformed in PDFs. We also, within our borrower portal, if borrowers are using that on mobile, we basically crop. So they basically get these squares around the documents to scan it and cut it out properly. So that answers a bit, I hope, to Martin's question. The second thing, indeed, Sven, I think credit broker cases might sometimes be more complex. And different document types will be needed. Possibly more documents will also be needed in case there's, for example, refinancing or something as part of the journey. At Oper, we automatically determine which documents are needed depending on the application data. So if, for example, a borrower says, "I want to refinance a certain credit," then we try to automatically request that document. And we also, in our borrower portal, try to basically explain to the borrower where they can find the document. So we first explain why the document is needed. And then the second thing is where they can find it, so that we basically try to make it as easy as possible for the borrower to find those documents. So we really try to help the borrower in making it as easy as possible for them to provide the needed documents.
Maybe Sven, to challenge you a little bit on that. I think you are right. I think today, especially in the Belgian market where you are active, a broker is really the solution finder, where majority of the banks are more, the factories with standard products. But for me, then the theme becomes even more relevant if tomorrow your company grows further and you want to hire 5 to 10 advisors, is how are you going to train them on the complexity? And I think there, with the co-piloting, we are really trying to find technical solutions to help them advise the right product for their clients. So for me, apart from the document processing, which is also because you need to do it for multiple banks, so you need to know how to navigate that. I think any broker business that wants to that wants to scale has to really also fix that challenge, because they have the duty to advise even more so sometimes than banks. So I think that can be really relevant for you as well.
Thanks, Geert. So as we come to an end from the webinar, as we wrap up, I'd like to thank our speakers for sharing their expertise and insights, and to you all for attending today. And if you'd like to find out more about how Oper can support advisors in your lending business, you can book a demo on our website, www.opercredits.com, or link in the chat. So follow us on LinkedIn at Opercredits for more updates in the future, and a recording of the webinar will be sent to you along with additional resources. And we definitely look forward to seeing you at the future events. Thanks a lot and have a great day.
Perfect. Thank you
Bye.
very much. Bye-bye.